Hey, it's Jeff Green, Green Financial Group. Thanks for tuning in the video blog today. Today, we're going to talk about that R word, recession. Stick around, be right back. So, one of the main questions I'm getting from clients right now is about recession. First of all, they want to know about, hey, what's up with all this market volatility? Where are we? We headed for a recession. Well, we've got a couple of things out there that are worrisome. Yes, we got inflation running at 40-year highs. Today is Friday, June 10th, and inflation numbers came out at 8.6% today. So higher than expected, and not on that. I thought we might start seeing a little bit of downtrend, and in my opinion, I think we will start seeing that when the Fed raises potentially another 50 basis points come later this month. So I'm not saying inflation is going away. Inflation is high and it's here to stay. It takes a lot to get rid of inflation. But if we see in that other 50 basis point rate hike, maybe another one after that, you may start to see the trend at least start to go down a little bit. Only one real way to get rid of inflation, that's just to quit printing money. If you look at M2, the money supply, that's the money in motion, that's bank demand deposits. The decade before 2020, M2, okay, that's the printing of money. M2 had risen at a rate of about 6% per year. Very slow, very moderate, very good growth pace of money. Well, when COVID hit and the government just started handing out checks, our M2 money supply increased over 40%. So we went from a 6% really M2 growth rate to over 40%. That spells one thing: inflation. You can't print more dollars. And by the way, supply chain, less access to some of the goods and services, the economy being shut down, that, you got more dollars chasing fewer goods. It's the very definition of inflation. So the only real way that we're going to get rid of inflation or back down to normal levels is just to simply quit printing money. So we'll see if that happens. But back to recession. In my opinion, in our opinion here at Green Financial Group, we don't see a recession coming in 2022. Just don't see it. I'm going to tell you why. I know all the talking heads out there. I see them on every news channel. I don't care which one you're watching, CNN, MSNBC, Fox News, Fox Business. The 90% of them are getting it wrong. And here's why. In the modern economy, two conditions have been met in the U.S. modern economy for a recession to actually take place. Condition number one. Look at the graph on the screen here. The first is an earnings recession. So what this chart is showing is that profit growth turns negative before recession. So you've got growth slowdowns in Europe and China. I get that. That is worrisome. But earnings remain relatively strong. If you look at what just recent first quarter earnings, and this is kind of as of May 12th or so, May 13th. I haven't finished looking at all the numbers, but since May, at least then, of the 78.5% of the companies that reported, which is about 88% of the market cap, had reported earnings. All those earnings were reported to the upside. You saw first quarter profit growth in the S&P 500 up 9.3%. The estimate was for 5.5%. Revenues rose over 12%. So it was a good quarter, very strong. So economically, earnings remain strong. So the second condition is a backup in the unemployment rate. So what you're looking at here, this chart is called the Somme Rule Recession Indicator. It's named for former Fed researcher Claudia Somme. But what this indicator is suggesting is that we will remain, in other words, the labor market is strong. There's actually 1.7 jobs available for every one worker out there. In this modern economy, unless we have seen these two conditions met, we have not seen a recession. They have not met. Earnings remain strong, jobs remain strong. Therefore, Green Financial Group's opinion, no recession in 22. So thanks for tuning the video blog today. Remember, any questions, concerns, or comments, give us a call. If you got concerns about recession and earnings, markets, hey, we're here to help. Call us, and remember, stay the course.